Good morning to all traders and welcome to this Wednesday's Market Insights video. Here's your host today, Stavros Tusios, as always on a daily Market Insights video. It is the 2nd of December of the 12th. And we're going to have a quick look at the metals and energies, starting with crude oil, gold, silver, and natural gas. Now, we've had news regarding, the metals and the energies yesterday, but not just only, of course. We have had news about fast tracking of vaccinations. We have had news that US stimulus talks are back, with actually a proposal being submitted earlier today by US senators that they announced $908 billion. That is expected to be voted upon, I assume. Also, Yellen now is taking more of a active position. She's going to be the new secretary for Biden, saying that really she's urging for action in order to prevent the US economy, of course, deteriorating further. Now, US number yesterday, ISM manufacturing were quite good. Chinese numbers still improve. Australian GDP was amazing, as well as very good data for the Swiss franc on the GDP front, despite that we saw dollar falling, right? And that seems to suggest that the coronavirus vaccination news really have investors shifting to different risk assets. And the also safe haven, I would say, gold rose. To some, that would be a surprise. But to me, originally, of course, initially a surprise, yes, but could also mean that simply investors are fighting the gold to be a good hedge once again, as over the past few months, we saw this relationship breaking, right? Of course, that includes the fact that the dollar was quite weak yesterday. We have also inflation expectations rising in the US, which seems to suggest that markets are expecting indeed the economy to improve going forward. We'll have the jobs markets on Friday. We'll see how that pans out, because the jobs market in the US is really still troublesome, since jobless claims don't really seem to be improving much. Yeah. Now, on the OPEC side, since I'm talking about the oil as well, on the oil side, the oil fell, right? And we've had a very bad API report. Plus, we have a lot of uncertainty from the OPEC Plus meetings, okay? They're going to, of course, rediscuss tomorrow on Thursday. But until then, today we have the EIA, and we might see prices again deteriorating a little bit further if, of course, the EIA validates the fears that the API report did as well. On the other side, we've also had a decline recently on the oil, as the Norway is looking to add production cuts on December 31st, which is going, of course, to affect the oil markets. So, and on Brexit side, just to touch that a little bit as well, the fisheries stumbling block that has been on the news over the past few weeks. I mean, there is talks that it might not be something that could really cause that, an exit without a deal. So that is also considered to be as risk positive for the markets, for the pound, I would say mainly, but we're not going to obviously look at this today. But it's an important headline to keep in mind. Now, starting with oil, we talked about that last week, the expectation of an impulse to the upside over here in wave C, right? And that's going to be wave 4. For the further continuation that we've been expecting for a while now. I'm looking at this as 1, 2, 3 over here. We're going to get 4 and 5. I will explain why. First of all, I want to see a very nice signal on the MACD, hidden divergence, right? In order to start considering prices are going to move on the upside. Second, if we take into account the length, the range of these waves, right? As you can see, 1 and 2 bring us to 161.8 for wave 3, right? But if we take this wave as well, this is also the 100 Fibonacci of wave 5, which means what? Wave 1, wave 3, and wave 5 are pretty much equal, right? With wave 3, of course, being a little bit bigger than both. But we don't like all three waves being equal. it is an impulse indeed, but usually wave 3 is longer. And since here I want the rule of alternation to be respected, wave 2 is sharp, I'm expecting wave 4 to be sideways, give us a very nice momentum on the downside here for a signal on the MACD and then move higher. We can go to the 48.54 or even to the 38.2 Fibonacci extension of waves A and B around 49.70, perhaps even 50 before we turn. The downside, obviously, over here, we are looking at the 39.26. This will be the lowest low I would be looking for this particular market in order to consider this as an impulse to the upside. Now on gold quickly, gold turned out exactly as we expected last week. We actually did call the 1763 here, right? I said that would be the maximum low that this market could reach after this WX and wave correction. I was expecting this wave Y to end at the lowest 1763, where it did as well. So I believe this is a turning point for the gold. We're going to get wave 1 at around 1837, probably correct, move higher, and start breaking all those levels, of course, successfully and in coordination. 1882, 1919, 1956. The other scenario, as we've explained before, in case we break below this level, this becomes an impulse 1, 2, 3, 4, and 5. It could be a leading diagonal in wave 1, or it could be 1, 2, 3, 4, and 5. That could be a wave 2. Then this is a multi-structural 3, right? But this signal to me, it's a very good indication that there is, at least in the medium term, going to be more upside to at least the 1900s, okay? Let's go on silver. Silver, a similar view we had over here. We're expecting more downside, but there is something worrisome in silver. We didn't break below the previous low, right? And also we have a signal on the RSI that indicates that it's going to be more downside. We took the 50 Fibonacci of wave W, wave Y out, okay, at 24. It could be a case where we're going to take the 24 out as well and then move lower, because I really want to see at least the previous low breaking before we start considering this move to the upside, you know, as a valid impulse, because you know, none of this looks impulsive, right? So we need another move to the downside, perhaps to the 20.70, as I've actually explained last week. Natural gas, on the other hand, natural gas AB, and we're expecting for wave C over up here, right? Which seems to be moving exactly as we expected. Last week I called this wave 4, and I said either we're going to get 1, 2, 3, 4, and 5 for wave C, which is going to be the end minor 5, or we're going to get a W, X, and Y. Yes, because we can still go down to the we can actually go down to 2.18, yeah, for this to still be considered as an impulse to the upside. So this is all going to be for today. I hope you enjoyed this video. Thank you for watching, and we'll speak again tomorrow.